I just look at a few basic things. I look at the Dow gold ratio, gold silver ratio. And if you just look at these basic things here, you can see why Greg Mannarino says that silver is the most undervalued asset on the planet Earth. We're going to see multiples here. You have to figure out where's the Dow eventually going to go. I think we're going to get a 1-to-1 parity between gold and the Dow. And then I think between gold and silver, 15-to-1. 15-to-1 is probably, and it could get even more extreme in a full-on like meltdown scenario, which we're going to get. I mean, the debt market is a time bomb. It's ticking louder and louder. It's ticking faster. It's going to go off. It's going to go off when they want it to. Central banks are buying it all. They're going to buy more this year, a lot more. We're going to see rate cuts. I know that for a fact. And that's going to drive the global debt bubble beyond.
The price of silver is widely forecast to rise again in 2024, but a global economic slowdown could cap its gains, even as industrial demand remains close to record highs, pushing up the gold-silver ratio of the two formerly monetary metals' relative prices. Gregory Mannarino, the Robinhood of Wall Street, highlights key indicators like the Dow gold and gold-silver ratios, emphasizing his strong belief in silver's significant undervaluation. He predicts potential 1-to-1 gold-dow parity and a 15-to-1 gold-silver ratio. Despite a bullish stance on gold, the fund anticipates silver outperforming this year. In this emerging bull market, expected to last many years, we predict the gold-to-silver ratio will drop below 30:1, setting an initial goal for 2024 at 70:1, the analyst said. Should gold appreciate by 20%, it would end the year at $2,475, and with a gold-to-silver ratio of 70-to-1, silver would close at $35, equating to a 48% return. However, Gregory states the current financial situation is an ideal time to bet against rising debt and achieve financial independence. He urges individuals to invest in precious metals due to a surge in global debt. Data published by the Treasury Department showed that total public debt outstanding rose to $34.001 trillion on December 29th. That figure, also known as the national debt, is the total amount of outstanding borrowing by the U.S. federal government accumulated over the nation's history. Gregory also anticipates central banks continuing asset purchases and rate cuts, inflating the global debt bubble. Prices of government debt had already been hit after Fed board member Christopher Waller on Tuesday warned the U.S. central bank should also not rush to cut rates, saying policymakers should take our time to make sure we do this right. He advises investing in discounted gold and silver, despite stock market highs. Now, we present the clips of Gregory Mannarino's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
We're going to see the global debt and debts and deficits surge higher than we've ever seen before, faster. Well, you want to take the opposite side of that trade. You want to be in real things. Commodities, my favorite asset of all time. I hate calling silver a commodity because I think it's real money, as gold too. So start, get out of their system. We don't need to participate in their system. Unfortunately, people feel like they have no choice. But there are other ways that people can, sidestep this. And I think that's the number one way, is to bet against the debt, become your own central bank, do what the central banks are telling you not to do. They don't want you to hold gold and silver. You need to do our so-called loving, caring politicians here. They don't want you in anything other than the U.S. dollar. That should tell you something here. Okay, realize where the market's going to go here. The central banks here. It's interesting. I want people to pay attention to this. Notice when these so-called attacks happen, the bombings and missile strikes anywhere in the world. Lately, it's obviously been the Middle East. They happen after the market closes. They happen on holidays. They happen on weekends, because it's all designed that way, okay? Because they don't want it to affect the markets here. And there's no easier, better time to be involved in this. That is betting against the debt, become your own central bank, hoarding, if you could, if you're able to, gold, silver, especially here. Setting yourself up for what's coming, because this is not going to go on forever. This is going to flip from a risk-on environment to a risk-off. Commodities are going to the moon at one particular time when they choose. Again, central banks right here, their goal, at least for 24, is to pull more cash into the now on an unprecedented scale as the economy free falls faster. The faster the economy free falls, the higher the market's going to go. I just look at a few basic things. I look at the Dow gold ratio, gold silver ratio. And if you just look at these basic things here, you can see why Greg Mannarino says that silver is the most undivided asset on the planet Earth. I think we're going to see multiples here. You have to figure out where's the Dow eventually going to go. I think we're going to get a 1-to-1 parity between gold and the Dow. And then I think between gold and silver, 15-to-1. 15-to-1 is probably, and it could get even more extreme in a full-on like meltdown scenario, which we're going to get. I mean, the debt market is a time bomb. It's ticking louder and louder. It's ticking faster. It's going to go off. It's going to go off when they want it to. Central banks are buying it all. They're going to buy more this year, a lot more. We're going to see rate cuts. I know that for a fact. And that's going to drive the global debt bubble beyond. And that's going to prop up the stock markets here. But that creates opportunity. If we realize, and I think the stock market's we're going to hit record high, probably not too far off here. That means that certain assets like gold, silver, commodities in aggregate are on sale. So good, you buy them now while they're on sale. But don't expect this stuff to do anything really until the eventual meltdown in the debt market. It's going to happen, and it's going to be a shock and awe moment for the world. And just be ready for it.
Gregory Mannarino notes Waller's economic statements, expressing concern about media manipulation. Despite a sharp contraction in the New York Fed's business index, Waller views the Fed's data as nearly optimal. Federal Reserve Governor Christopher Waller advises a cautious and systematic approach to interest rate cuts. As long as inflation doesn't rebound and stay elevated, I believe the FOMC will be able to lower the target range for the federal funds rate this year, Waller said at a virtual event, hosted by the Brookings Institution on Tuesday. Furthermore, he notes the ongoing liquidity crisis and the urgency to pull cash into the system. The decline in the surplus funds to asset ratio from 36% 1 year ago to 24% signals a potential liquidity squeeze. Credit unions must be prepared for a liquidity crisis that could hit in 2024 by performing routine assessments while monitoring the economic landscape. Let's get back to the interview.
This is, we heard from Fed President Waller. Now, this is exactly what he had to say. It's kind of interesting in my view. So the wording here is what gets to me. And this is the article right here. So Fed President Waller this morning here, economic data for the Fed is almost as good as it gets. I mean, and just an hour prior to that, we just found out, again, the New York Fed Business Activity Index is in absolute literal free fall, is contracting faster than any other time in history, more so than even during the scamdemic. Okay. So, I mean, you get one piece of information, then he's telling us how great this is, but the situation is, look at the wording. Economic data for the Fed. Because that's exactly what they're doing. They're destroying the economy, and they're using, the CNBCs, the Bloomberg, to just lie and look here and don't look here. And look, the data is always, it's all made up. The Bureau of Labor Statistics, and I want people to look this up. This is about maybe 3 or 4 months ago, actually admitted the data is fake. It's all fake. It's made up. My hat goes off to the Bureau of Labor Statistics for actually admitting that, but that's a fact. So, look, people realize, at least to follow our work, they're being propagandized. They're being lied to. They're being told to look over here. Don't look over there. This huge false flag of wars and expanding wars and everything else that's going on, only in a mechanism here to pull cash into the now. The liquidity crisis is full on right now, and it's getting a lot worse faster, as you and I have talked about repeatedly. If I don't know, go back as far as people want to go. The stuff that we have spoken about really is amazing because it's all happening. And, what are we doing, you and me? We're telling people, raise your awareness. This is what you need to be paying attention to. And I think people that follow our work, by and large, get it. But the masses have no clue. They don't understand what's going on. And it's, again, by design, of course. Well, this particular one was the New York Fed Business Activity Index here. And it's just little things that, you kind of got to pay attention to that nobody ever does. But, here's the thing. People don't even need to follow that kind of stuff. People know something's wrong in their hearts. People know something's wrong. I mean, you talk to people every day. They know something is wrong. They can't put a finger on it because, again, you got the propaganda telling them one thing, and they're being told who to hate, who to love, blah, 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 and everything else that's going on here. People don't know. If they're able to clear their minds and just focus on, look, what they're seeing, again, they're being told by all of the propaganda ministry, how great their lives are. They couldn't be better. The economy is strong, it's booming, it's doing this, it's doing that, but ignore everything else. And it's unfortunate. We've seen this before. It's a repetitive pattern throughout history where the people are just, towards the end, especially of whatever's going on at any time in history, that's when the propaganda starts really getting worse. And this is something I outlined at the end of the prior year, this current year, where I said, look, the deceptions, the distractions, the lies, the tales are going to get even worse.
While gold may be the most well-known precious metal, silver should be noticed. Silver provides an affordable and versatile investment opportunity, whether you're a seasoned investor or new to the precious metals market. Given the potential rise in precious metal prices, what steps can individuals take to safeguard their financial well-being? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.